Guys, Bitcoin is at a critical point right now, and we are actually going to have a big move happening sooner than most people believe. But I'm also going to talk about some of the key charts happening behind the scenes right now, which is telling us what the direction of the move is actually going to be. I'm going to go through everything you need to know about crypto for this week, as well as this fractal showing us what the next potential move is actually going to be in terms of if it's going to go up or if it's going to go down. And we do have a very interesting take I have on stable coins, which could actually be one key thing to boost liquidity in the market, meaning that we are going to get more money involved in the system and our bags are all going to go up over time. So guys, a very important stuff to talk about today, guys. Make sure to stick around from the beginning until the end. Welcome back, everybody. My name is Chris, bringing you cryptocurrency videos every day, teaching you how to make money in this market. If you are new to the channel, then make sure to subscribe and activate the bell right now. So let's get straight into it, guys. And first, I want to show you the 4-hourly time frame for Bitcoin, because what you can see is that we had a bounce yesterday, and this bounce led us up to the resistance level at $66,700. I have an orange line right here, and from my orange line we were rejected 1, 2, 3, 4, 5 times. So 5 times we were rejected, but from this point we didn't manage to break through this, and we went down a little bit, and now we're potentially getting some more momentum to try to break through this level again. So what we can see here is that my support and resistance levels, they all matter, and it's very important to keep track of. But the major one, we know that we have massive support at $63,500. Okay, so this is what I'm watching. Like, Bitcoin is just going sideways. It is just having these pumps and it's having these drops. So not a lot of things is really happening for a bit. But that's why I want to zoom out and I want to actually show you some interesting charts here in a bit. But first, for Ethereum, you can see a little bit of the same thing. We've had a bounce for Ethereum, now coming up to my resistance level, which is at 3,676. Traditional markets are going up. We are in fact on a candle basis, candle closing basis. You can see that we are actually at a new all-time high. So that is a good sign as well. So traditional markets are going up. Traditional markets remains bullish. So that is what I got for the short-term charts for Bitcoin. Apart from one other thing I want to show you, because we are right now squeezing. If we look at the daily time frame and you look at the moving averages, you can see that we're squeezing in between the 50-day moving average and the 200-day moving average. Let me just double check that. So this is the 50. This is actually the 100-day moving average, which is the purple one. So we're squeezing in between these two. So one of them will have to break. You can see that the 50-day moving average, the orange line, has actually, or the orange moving average here, has actually been supporting us on the way down. So we got supported 1, 2, 3, and now 4 times. In fact, we went down below it slightly here. This was actually today. And now we have rallied up and we are actually above it. So that is good. But now one of these things are going to have to break. Either we break through the orange line, which is also being pushed down by the 100-day moving average. So 2 very key resistance points right here. And then we have 1 key support point, which is the 50-day moving average. Which ones are stronger? Well, obviously these 2 are stronger. The 100-day moving average is stronger than the 50. So this is a strong resistance level, and also it's amplified or reinforced by my orange line at 66,730. So they are at the same price point. So very key and strong resistance here. But then again, Bitcoin is Bitcoin. So let's see if we're able to break through that. If we're able to break through it, I do think it is going to lead into a little bit of a pop towards the upside. Why? Because right here, you can see that, and what is this? This is the liquidation heat map. So basically, it shows us that which price levels you can see a lot of liquidations happen. And what you can see right now is that we actually do have a lot of potential long liquidations. Should the price drop, you have at this point, which is right at $66,000 essentially, you have almost $13 million worth of liquidations. And then we go down here, you have another 11, you go down another 13, and you go down another 15. So on the way down to like $65,000, you have like, what is that? $50 million, more than $50 million worth of liquidations. So that is why the bulls are trying to defend this area. But on the way up, you can see that we don't really have a lot on the way up here in the close proximity. But once we start to get into $67,000, you do have 8, and then you have the big ones here at $14 million worth of liquidations at 67,200, another 15 right here, and another 12. So if we can clear $67,000, go up to 68, then that could cause a little bit of a short squeeze, meaning the price pumps. But also we need to be careful, because also likewise on the way down, you do have potential long liquidations and long squeezes, which means that the price is going to go down. I hope that that makes sense, guys. I'm trying to find more information to give all of you, as Bitcoin is just, going sideways. It's having these pops. It's going, consolidating just like we've been expecting. But yeah, I'm trying to find more data to show you what the next potential move is going to be. So if you want me to continue to use this and continue to update you on the liquidation levels, then let me know down in the comment section. How about altcoins? Well, what we can see is that we're not in altcoin season by any stretch of the imagination. In fact, the Bitcoin dominance is getting stronger. And this is also expected as token unlocks are happening, tokens are dumping, and Bitcoin is the safest crypto. And altcoins are, of course, you're going to have outliers, one-off, but now it's just PvP. So if you look at the daily, you can see that most altcoins are deep in the red. Some of them are in the green. So what this means is that the liquidity is mostly going out of most of the altcoins into a very few ones. So unless you can time and actually pick the ones that are seeing the liquidity inflow, then you are on average going to lose money. In fact, if you look at the weekly, you can see it even more clearly. You have some coins that have been going up, but most of them are in deep, deep red. So be careful holding too much altcoins right now, guys, because most of them are going to bleed, especially against Bitcoin. Now, what to be ready for this week? Not a lot, to be honest. You have the Fed officials speaking all week. You have the Bank of England rate decision on Thursday, I guess would be the biggest one. I want to show you this fractal. So this is a fractal for May. It is on the 12-hour time frame. And what you can see is that we had a point of control where we dipped down multiple times, got supported. And then in the end, we had a fake breakdown before we had a massive pop towards the upside. What you can see here is that a little bit of a similar pattern at least, but it's on the 4-hourly time frame. But we go down, we dip multiple times to this point of control. We have had a breakdown right here. Is it potentially going to be a fake breakdown? Well, if you take the price action that happened previously on this fake breakdown, then it could potentially take us up to $71,400 again. This is just a little bit of a fractal I found. So let me know if you think that this could potentially play out here. And on the on-chain data I got for you today, we have wallets holding 10 or more Bitcoin. They have collectively just matched their same level of holdings from exactly 2 years ago. So 2 years ago, you had the same amount of wallets holding more than 10 Bitcoin, and then, we went down here, and now you have the same amount. So holders with more than 10 Bitcoin have accumulated. So a lot of people are actually accumulating during this consolidation and during, I guess we could call it this bull run, since this stretches all the way to the beginning of 2023. So that is cool to see. And another very important thing, guys, actually before I talk about this, but this could cause a lot of liquidity to enter into the market, and this could cause the overall sentiment in the crypto markets to change. But before I talk about that, if you want to get the best trading bonuses available out there, make sure to sign up for Bybit, up to $30,000 if you sign up using this link right here, up to $60,000 on OKX by using this link, and then on BitGet you have up to $40,000. Also, the best trading toolkit available out there, the Lux Algo, you get up to 20% off by using this link right here. All right, so let's talk about this. The US dollar's reserve currency status remains in a downtrend. So what you can see is that more and more countries are dumping the US dollar. They don't have as much faith as it. You could see that it was at 71% of reserves globally in 2000s. Now it is currently at 58.4. So the Chinese yuan's share has actually surged, and you can see that the euro's share has also gone up. So the US dollar's reserve currency status, it is actually not safe anymore. It is starting to go down. So what we could see actually, and this is really interesting because this was actually a former House Speaker, Paul Ryan, who called for the US to fight China with stablecoins. Now bear with me, I will explain how this works. Well, we know that stablecoins, for every stablecoin that is issued on the blockchain, you have the US dollar actually backing each stablecoin. So that is the thesis, that is what is supposed to be the case. And I do think it is the case for USDT Tether and for USDC at least. Now we know that they are backed by US treasuries. Now US treasuries is actually very significant because the buyers of US treasuries, they are starting to go away. So not a lot of buyers are buying US treasuries anymore. As the demand for it goes down, you need to boost demand somehow. And one of the biggest actually demands for US treasuries is Tether. In fact, Tether now ranks 19th in the US treasury holdings ahead of Germany. So Tether, USDT, which we're using, is bigger than Germany in terms of buying United States dollars. So what this senator is actually saying, or this former speaker is saying, is that why not embrace this? As governments, as different entities stop buying US treasuries, well, we could use stable coins because they are buying US treasuries because we need stable dollars in the crypto ecosystem, right? So if they actually start to promote stable coins, you're going to see more stable coins being issued, being backed by US dollars, and that could actually also boost liquidity as we see more stable coins in the crypto space. That is going to lead into more buying of altcoins, more buying of Bitcoin, which boosts liquidity and our bags go through the roof. So that is the thesis here. So let's keep our eyes on this. Could this be one big incentive for the US to start pushing stable coins? Not their own, but maybe even USD Tether and USDC. And then based on that, you could see more liquidity in the market, which boosts the entire space. So just another thesis I wanted to share with you guys. Thank you so much for watching this video, and I will see you in the next one.